Welcome to TradeTheNBA.com. This is John. This report is for the 16th. Well, and not surprising, we were looking for a return back up to the 0%. They got slightly above it, and it faded slightly below it. You can see that magenta has crossed yellow, but still in a decline, so it's a bit weak. But that dip of orange below the 7.5 usually is enough to give that little bit of boost, and that's exactly what we were looking for. We knew that we were reaching that super negative DOC below the 23 level here for DOC green, and that pivot back up enough to get it a little bit, still weak, but also from an extreme standpoint, moved from being below the negative 60 here, which is the red, and then popping back up in the green usually has a little bit more of a bullish tint. And the expectation would be to try and push back towards that 39.16, but still there's considerable pressure in between this, and so that 37.50 range to all the way up into this 39. So it's a pretty big range that things can move. This is still not super strong, so I would expect more back and forth within that. And of course, pretty decent reaction off of the Fed's increase of rates. You can see from an NQ standpoint, a little bit stronger. That angle is quite as steep, and the dip of the orange on that one had already been much more aggressive. So we're already looking at the potential of green here crossing above red, which has already started in the pre-market setup of it. So if that continues, we would expect continued push towards that 23%. Whether they'll be able to get above that seems to be more problematic given where we're at with the shakeout. So we would need to see that move above negative 13.5. This is kind of the typical things that we look for. From a euro standpoint, of course, they're doing everything they can to salvage when it gets down to that the low being down at that 103 level, 103.5. And so, again, very precarious from euro standpoint, and that coincides with what we were talking about from Japanese standpoint too, because they've been begging for the Fed to step in to help, and I don't know that the Fed will have any choice but to be forced to, particularly with raising rates. It certainly draws capital from everywhere to the dollar, and it just makes it more problematic while they're having difficulties with no end in sight to inflationary pressures and that. So it's becoming a progressive increase of pressure on financial constraints. The artificial pressure against gold slightly alleviated here. We're going to see a bounce back up of the readings and that, and it should start another leg back to the upside on after all that we've been seeing here. There's just no real reason we would be, other than like we've talked about the potential justification that some people have had that there would be deflationary pressure, but I think that's becoming less and less likely, particularly as we've seen oil still pretty elevated. I mean, we're off the highs pretty dramatically right now, but it's still over anything over 100 is still problematic. 113. This isn't going to take much for it to move back and forth. We saw also in EU area the Russians have cut oil transits on the pipeline. Another, what was it, 30 or 40% reduction in flow. So there's going to be some critical energy situations developed for the EU setup, and it's just really problematic for them. From a TLT, interest rates, of course, a little bit of bounce up from that dip all the way down to 108, and potentially still we're looking for that to break down even further as more capital flows come in. It's caused a little bit of a decline in the rate, but overall rates are still going to continue to rise with it. And I don't think that the Fed's all that upset with this situation at this particular point, because they realize that just the handle on inflation is just not even remotely under control. And from a Bitcoin standpoint, a little bit of salvation after coming down to that 20. They needed to hold that level desperately, and it was enough to keep it there. Still pretty decent from an MBI reading with the magenta over, whether it will be able to continue to push towards that 100% with the declining 50% would be the expectation once it stays above 50%. So that becomes a pretty easy threshold right there at the 50% mark, which is at just roughly 22K. So it's important that it stays above it, because below you can create all sorts of additional problems. And this has been an issue for cryptos in general over this last week plus. But this has been going on for a while. I mean, we've been seeing a decline since the peaks. And the ongoing pressure just hasn't abated at all. ETH still trades very effectively within the NBI readings that we have in the paint bar, so I still think it's very effective. You just have to be comfortable being fluid with it. From a 50K standpoint, we had a little bit of a turnaround, bought that, went short, had a nice dip, the turnaround was pretty fast, and so it ended up just pretty much a net zero on that one. From 5K, we had that early bump that continued pretty much until right about the open, and things started to fade back. And there really weren't that many positive extremes. There were just a couple of them that really had already been pre-filled in that. So this was just pretty much the normal back and forth. And it was quite an active day. We had a lot of movement back and forth. And then a little bit later, after the dips came through, we started to see some buildup. Well, always tough when you have the red leading with the magenta. For me, it's usually a question of once the green DOC crosses above cyan at that particular stage, and particularly when you have cyan already down at 7.5, there's usually a pretty strong reading, and shakeout already had the yellow going above, so flipping to the long side above that 23%, pretty straightforward, and that was a nice run. It took us all the way back up to the peaks. And then we had just the typical from that 100% down to 50% based for a while, and then shot up, made a new high, but then filled it all the way back. And that's where we kind of ended up, and now we're in a little bit of a positive push right now in the post-market to come back up to the 50. So I'm trying to build on that one going forward, and potentially, hopefully, salvage a week from a long standpoint. But I think we've identified the pressures and what they are, and there's no real short-term abatement of that. So I think we can expect more of this back and forth. And literally, to see the breakdowns, you have to be willing to exit long positions and go with those back and forth. And even we talked about this from those dips, there would be some significant upswing moves that would be pretty strong, but overall still problematic from a positive standpoint, at least thinking that bulls have really secured any kind of strength in this. A lot of this seems to be just short cover and look for a little bit of a pop in price to attack again. So that's where my thinking would be on it. So I would keep an eye on those, and again, just following our colors, pretty effective. As always, though, I will update anything relevant. Trade well. We'll talk to you later.